Bitcoin is a digital currency. It operates on a decentralized network, meaning no single entity controls it. Miners are crucial to this network. They validate transactions and ensure the security of the Bitcoin blockchain. As a reward for their efforts, miners receive Bitcoin. The Bitcoin halving is a pre-programmed event. It occurs approximately every 4 years. During a halving, the reward that miners receive for their work is cut in half. This reduction in reward has significant implications for the Bitcoin supply. The purpose of the halving is to control inflation. By reducing the rate at which new Bitcoin enters circulation, the halving helps to ensure the scarcity of the cryptocurrency. This scarcity is a key factor in Bitcoin's value proposition. The next Bitcoin halving is expected to occur in early 2025. This event is highly anticipated by investors and enthusiasts alike. It is seen as a potential catalyst for a significant price increase. Historically, Bitcoin halvings have been followed by periods of significant price appreciation. This correlation can be attributed to the basic principles of supply and demand. When the supply of Bitcoin is constrained, as it is during a halving, and demand remains constant or increases, the price tends to go up. Following the first halving in 2012, Bitcoin's price surged from around $12 to over $1,000. This dramatic increase demonstrated the potential impact of halving events on the market. The second halving in 2016 also preceded a bull run, with Bitcoin's price reaching an all-time high of nearly $20,000 in 2017. The most recent halving, which took place in May 2020, was no different. Bitcoin's price more than quadrupled in the months that followed. The price reached a new all-time high of over $60,000 in early 2021. While past performance is not necessarily indicative of future results, the historical data suggests that Bitcoin halvings can be significant market events. Investors and traders alike are closely watching the upcoming halving, eager to see how it will impact the price of Bitcoin. Predicting the future price of Bitcoin is a notoriously difficult task. However, many analysts and experts have offered their predictions for the impact of the 2025 halving. Some analysts are bullish, predicting that Bitcoin could reach $150,000, $200,000, or even $500,000. These optimistic forecasts are based on the historical price action following previous halvings, as well as the growing institutional adoption of Bitcoin. Others are more conservative, suggesting that Bitcoin could trade in the $75,000 to $100,000 range. These predictions take into account potential headwinds, such as regulatory uncertainty and global economic conditions. It is important to note that these are just predictions, and the actual price of Bitcoin could be significantly different. Section 4. Riding the Wave Strategies for Bitcoin Investors. The upcoming Bitcoin halving presents both opportunities and challenges for investors. Here are a few key strategies to consider. First, do your research. Before investing in Bitcoin, it is essential to thoroughly research and understand the risks involved. This includes understanding the technical aspects of Bitcoin, the factors that can influence its price, and the different ways to buy, sell, and store Bitcoin securely. Second, consider your risk tolerance. Bitcoin is a highly volatile asset. Its price can fluctuate significantly in short periods. It is crucial to invest only what you can afford to lose. Consider your risk tolerance and investment goals before making any investment decisions. Third, don't try to time the market. Trying to predict the exact top or bottom of the market is extremely difficult, even for experienced traders. Instead of trying to time the market, consider a dollar-cost averaging strategy. This involves investing a fixed amount of money at regular intervals, regardless of the price. Finally, stay informed. The cryptocurrency market is constantly evolving, with new developments and regulations emerging frequently. Stay informed about the latest news and trends by following reputable sources of information. Section 5. Beyond Bitcoin altcoins, market shifts and risks. While Bitcoin often dominates the headlines, it is not the only cryptocurrency in the market. Thousands of altcoins or alternative cryptocurrencies exist, each with its own unique features and value propositions. Some popular altcoins include Ethereum, Litecoin, and Ripple. The upcoming Bitcoin halving could potentially impact the broader cryptocurrency market. Some analysts believe that altcoins could benefit from the increased attention and investment in the space. Others caution that Bitcoin's price movements could overshadow altcoins, at least in the short term. Despite the potential for significant returns, investing in cryptocurrencies comes with inherent risks. Regulatory uncertainty remains a major concern, as governments around the world grapple with how to regulate these emerging assets. Economic downturns could also negatively impact the cryptocurrency market.